Okay, you hear it everywhere, the AI boom. But what is it really? Is this a true technological revolution, the kind that's going to reshape our world for the next 50 years? Or are we just watching the biggest, most spectacular financial bubble in history inflate right before our eyes? Let's get into it.
So let's just start with a number to put this whole thing in perspective. $2 trillion. That's the projected annual cost by 2030 just to keep the lights on for all this new AI infrastructure. To wrap your head around that, that's more than the combined 2024 revenue of Amazon, Apple, Microsoft, Meta, Nvidia, and Google's parent company, Alphabet. The scale is it's almost hard to comprehend.
And that right there, that's the story driving all this spending. The people betting big on this, they don't see a short-term trend. They believe they are literally building the foundation for a whole new economic era, what they're calling the fourth industrial revolution. This isn't just about faster computers. It's about building the future.
So, first up, let's just try and get a sense of the sheer size of this investment wave.
All this talk of AI infrastructure, chips, data centers, power grids, it can feel pretty abstract. So this is a great way to think about it. Imagine an empty patch of desert, and then, practically overnight, you build Las Vegas. Or you build modern-day Dubai right out of the sand. That's the level of creation, the amount of pure investment that we're seeing right now. Okay, so is this just a flash in the pan? Well, the folks who are all in on this say, no way. They argue this is something much, much bigger, a long-term economic transformation.
And to understand their argument, you gotta know this term, CapEx supercycle. Now, CapEx is just short for capital expenditure. It's the money companies spend on physical stuff, like buildings and equipment. A supercycle is when that spending goes into overdrive, and not just for a year or two. We're talking about a long, sustained period, maybe 5, 7, even 10 years, where companies are just pouring historic amounts of cash into building out new tech. In this quote, it just sums up the whole mindset perfectly. The people who believe in the supercycle think we're just getting started. All this incredible growth and spending we've seen so far, that's just the warm-up act. In their view, there's a long, long way to go, which means a lot more investment and growth is still on the table. And here's the thing, this isn't just about a few tech companies getting rich. The idea here is that there's a massive multiplier effect. For every single dollar spent on a high-end AI chip, it could generate another $10 in spending somewhere else in the economy. We're talking huge upgrades to our power grids, new construction, brand new services. It's a ripple effect that could, in theory, lift the entire economic boat. Okay, that's the supercycle story. It's optimistic, it's huge, but for every argument about a golden age, there's an equally loud warning that this is all just a prelude to a historic crash. And this is the big question, right? The one that keeps people up at night. Because we have seen this movie before. A hot new technology, a total frenzy of investment, and then pop. Right away, your mind probably jumps to the dot-com bubble of the late 90s. And yeah, you can see the parallels. Tons of money is pouring into a technology where the ultimate payoff is still a little fuzzy. But here's the key difference. Unlike back then, the big AI companies today are making staggering amounts of money. They are incredibly profitable. The catch? Even with all that cash flowing in, some of them are still taking on massive amounts of debt to pay for this expansion. And that starts to raise some pretty serious red flags. Could this whole AI boom just be papering over the cracks of a much more fragile economy? I mean, one analysis from Deutsche Bank even suggested that if you took away all this AI spending, the US might already be in a recession. Wow. The growth is also incredibly unbalanced. It's all happening in one sector. And that reliance on debt, that's a huge gamble. So let's pull back from all the market talk for a minute. What does all this mean for, actual people on the ground? Because once you zoom out, the story gets a lot more complicated. And that brings us to this idea of a K-shaped economy. Just picture the letter K, right? There's one arm that goes up and another arm that goes down. That's the idea here. Different parts of the economy are moving in completely opposite directions. The people who own assets, stocks, real estate, they're on that top arm, going up. But people living paycheck to paycheck, they're on that bottom arm, falling further and further behind. And here it is, laid out plain and simple. At the top of the K, you've got asset holders, high-income earners. Their wealth is growing, and yeah, inflation is annoying, but they can handle it.
But then you look at the bottom of the K. You've got lower income workers, folks living paycheck to paycheck, and they are getting absolutely crushed by the rising cost of everything because their wages just aren't keeping up. You can see this imbalance in the job market too. You hear the headline unemployment numbers, and they sound pretty good. But when you actually peel back the layers and look at where the new jobs are, you see a really weird picture. Almost all the recent growth is in just three areas: government, healthcare, and services. The rest of the private sector? Very little job growth at all. It suggests a labor market that is way less healthy than it looks on the surface. And this is where AI could come in and pour gasoline on the fire. The International Monetary Fund estimates that a staggering 60% of jobs in developed countries are exposed to AI. Now, that doesn't mean all those jobs will disappear overnight, but it does mean they could be transformed or automated, creating huge disruption and possibly making that gap between the top and the bottom of the K even wider. All right, so let's put all the pieces together. We have this massive, world-changing boom happening. What's actually holding it all up? And more importantly, how fragile is it?
Well, according to the experts, this whole thing is basically balanced on three key pillars. First, borrowing conditions have to stay favorable. It needs to be easy and cheap for companies to get money. Second, corporate profits have to stay strong, so companies have the cash to invest. And third, investors have to stay confident and keep pouring money into these big, long-term bets. But if even one of those pillars starts to wobble, the whole structure could be at risk. So what could knock them over? Well, think about it. A surprise spike in inflation that forces interest rates up, a labor market that suddenly gets worse and spooks everybody, or maybe just that mountain of debt finally becomes too big to handle. All these things have to go right for the supercycle to keep going.
So look, there's no doubt the AI boom is real. The money being spent is historic, and the technology being built is incredible. But the fundamental question, the one we're left with, is this. Is all this investment actually building a stronger, more resilient economy for everyone? Or is it creating a fragile, debt-fueled future that really only benefits a select few, leaving everybody else behind?